Joining me right now is Potomac Wealth Advisors founder and president, Mark Avallone. Mark, great to see you this morning. What is going on here this morning? Is this a trade in an overall down year? How do you see this morning's gains?
Good morning. I think this morning's gains is a bit of a reaction from an overreaction. The May number was strong. That was not good news, but the markets were devastated after that. And what I think is happening is investors are realizing that stock market leads the economy. It will lead us and turn before we get out of a recession that we're in now or soon to be in now. And with valuations so beaten down, people are starting to go shopping for some great American companies. And I think that's what's happening. Yeah. It's a little optimistic. It might be a bit early. It might be choppy from here. But I don't think it's directionally incorrect. I think that investors should start to look for longer-term opportunities.
Yeah, and you have to believe that even if we are looking at a troubled year for stock prices in 2022, there has to be trades within the sell-off because you're right, things are selling off, in some cases overdone. We're looking at some comments from the Federal Reserve this week. Cleveland Federal Reserve President Loretta Mester and Richmond Fed President Tom Barkin will both speak today. Then you've got Jay Powell headed to Capitol Hill tomorrow for his two-day testimony on the Hill. Mark, what might we find from these conversations, this Fed speak this week? Anything that you're expecting specific to move markets?
Well, what's very interesting is Jerome Powell used to be a friend to the market when he had easy money policy, and now he's a friend of the market when he has tight monetary policy. That's how bad the inflation game has gotten. Now the markets want to hear tough talk. They want to see action. And they want to hear that inflation is public enemy number one. So I think as long as they maintain that, don't vacillate, get wishy-washy, and go back on this recent rhetoric of we are here to tame inflation. As long as they continue to show the American public, the investing community, that they are serious about fighting inflation first, I think it's good for the markets.
Well, it sounds like you agree with the three-quarters of point hike last week from the Federal Reserve, 75 basis points. Here's the former president of the Kansas City Federal Reserve, Tom Honig, with me on Sunday on the macro story. Watch. How much worse do you expect this to get, and how much higher do you expect the Federal Reserve to raise interest rates, Tom?
I think inflation will probably stay in the 8% range, and then depending on how big a recession we encounter, that will come down once we get started.
So do you think we're in recession right now?
Well, the slowdown is real and it's happening. It's not showing up in all the data, but it will. I talk to realtors. I'm looking at turn days in real estate market, commercial property, how it is here in the Washington, D.C. area, and there are signs of a slowdown. But I think the Fed doesn't control all of the economy, so they may have to go heavier on rates because of the problems we're having with oil. Oil inflation is driving this. So the Fed is fighting the entire inflation problem with only half of the tools. So it can only control the interest rate sensitive housing and autos, and that hopes to bring down prices across the board when energy is raising prices across the board. So what we really need is not only an aggressive Fed, but we need an effective energy policy. And short of that, inflation is not going to be a tool that just the Fed can tame. They need help elsewhere. I'm not sure they're going to get it, and that's why it might linger.
All right, real quick, how do you allocate capital in the face of all of this? Are you looking for sell-offs to buy into, looking for opportunities?
Yes, the first thing you do is don't get emotional with investing at this time. Visualize a recovery. I know it's difficult, but be greedy when others are fearful, and fearful when others are greedy could be a moniker for investors at this point. Slowly buy sectors that are beaten down, quality, cash flowing, market leaders, sectors we like technology that's been really hit hard. As we come out of this in late 22, maybe 2023, those stocks and those sectors may have a good opportunity for investors.
All right, Mark, great to see you this morning. Thanks so much. Mark Avallone joining us this morning on This Market. We'll talk soon, Mark.